Good afternoon, everybody. Welcome to Trader Minutes. Great to have you aboard, or good morning to you wherever you are. It's still morning here, but I know we're different parts of the world. Thanks for tuning in this afternoon. And looking here at the market, it's been kind of a volatile day. Just a lot of ups and downs, kind of range bound. You can see the market open right around this area right here. Rallied a little bit to reverse. Sorry, this isn't this going in ahead of the open this morning. Futures sold off pretty big and has rallied back up. It just kind of gone up and down and up and down. Right now the market's down. Futures here down about closing in on 6. Puts the market down around 5, 4.5 here. Technically this is a bullish move. Some nice little consolidation. Hey, Darren, nice little consolidation here above 1800. Nothing technically to worry about at this point. Just basically another day so far. If it starts to break below the 7 again, the bigger level would be down here around the 1780 level mark. For a break of that would be probably spell a little bit of a correction for the market. But I still, I think the bulls are still alive and well out there in the market. Okay, so two positions. Microsoft down about 50 cents. It's been hovering around here. It's been down towards 38. It holds off at 38 pretty well. If it closes below the 7, you guys, we're going to get out. So we're just going to watch this one at towards the latter part of the day. If it rallies back up and goes a little bit positive today, that's what we'd love to see. But if it closes down here, just spelling some short-term weakness, what it's going to do is we'll jump out of the trade, take that little bit of a loss, and look for a fresher setup if we don't get it here today. Tesla, up. It's been up about this point now for the last little while, up about 280, 270, 280 mark. It's a good day. It's doing everything we want to see technically so far. It's got some good volumes on it right here. So, so far so good. Okay, let's look at some of the other stocks out there right now. We jump into the training here. With FDX, this one UPS is down a little bit as well. Really, UPS is it down on oil? I would think a bigger move on oil. I think this is more of a technical move than anything at this point on UPS. Now, if it breaks down below the 7, it's not a bearish sign to see it break below the 7. Just suggesting short-term weakness here. It's been consolidating here above the 101 mark now for a couple weeks, looks like. If it starts to break below 101 and down below 100, then I'd get bearish on it. But right here, right now, a little bit too early. There is some divergence going on. Okay, I got you. Okay, dividend day. Divergence going on here and here with the MACD and also the rate of change up here where they're starting to weaken. Okay. But FDX, man, it's like there's a wall of sellers there at 140. That wall, those people step aside, the stock's set to run much higher. But right here, right now, it doesn't look like probably not going to happen today. What I'd be looking for here is a strong push above that 140 mark. And if we get something like that, then that might happen. Okay, some of the other stocks out there been watching today. FCX. One thing that's going on here is you see the Australian starting to get a little bit of strength here today, jumping up like that. When you see that, then you're going to start to see stocks like FCX and some of these other ones start to push higher as well. So we'll keep our eyes there. It has formed a nice little, so far, a nice little bottom right there for about the last week above the $34 range. Gapped out of that little bit of a bear trap, gapped out of it. A push higher from here would be very bullish. If it runs back down towards the 7, I'd get a little bit skeptical up for the bulls. Nucor, so far it's just some consolidation. If this did form a gravestone at the end of the day, just suggesting short-term weakness. Right now, it's still above the 7. It's still showing things still bullish in nature. But if it did form a gravestone, now when I talk gravestones, right, it's just an upside down capital T. Oops. Kind of like that. Yeah, that formed that today. It's not a big time reversal pattern, meaning the nice uptrend we've seen here is going to reverse. It's more of a short-term weakness thing. Could pull back a little bit. Doesn't mean the uptrend's off. But if I had a profit today and I saw that, if I saw a gravestone in the close, I'd take the profit and just look for another entry. Move on. I'm just reading Kevin's note here. Okay, thanks, Kevin. Kevin's asking what stocks we look at. He said he's understanding the trend rider and the techniques pretty well. I'm going to train on the 7-day moving average today, looking at that in different types of, you bet IK, in different types of scenarios. When you can trust it, the 7 moves above the 7 or below the 7 and all that kind of stuff. Typically, Kevin, we're going to be looking for S&P stocks. What I'll do is looking for S&P stocks. They got to be optionable. The options got to be pretty heavily traded. A pretty good rule of thumb, not always, but a pretty good rule of thumb, if you have a stock that trades over a million a day, the options are typically heavily traded as well, where you don't have the large bid-ask spreads. Okay, but most of it's going to be S&P stocks. Not always. Sometimes I'm surprised. Sometimes I'll find stocks in the 400,000 or 500,000 range on average on the volume, and the options look great. Tight spreads and they look good. But that's what we'll look at. You'll notice my top three are mostly the S&Ps. Not always, but sometimes I'll find some really good looking setups and post those. But we wouldn't trade them here because the option spreads. But for an individual trader, where the spreads are not too bad, but then we've had people get into those trades as well. A while ago, Krispy Kreme donuts was one of my calls, and we didn't trade that. In fact, it was a couple of my calls a while back. I'll just bring it in. But it's not. There was right through this range was a trend rider bull signal, and then right up through here. I believe AK got into this trade. Well, it's not. It's a trend rider. Got into the trade right here, somewhere in that range. But that's a little bit of a gravestone right there. Was time to exit. But yeah, but individual traders, it wasn't all that heavily traded as far as open interest and stuff like that. And that we bring, when we make a trade, it brings a lot of open interest along the way, if you know what I mean. And so we will avoid some of the lighter traded stocks like that. But that's, and we'll always look for Max. I like what you're seeing with Joy, but yeah, too bad with earnings tomorrow. But anyways, that's it. Facebook. Well, Jay can't hear me, but Facebook is a trend rider bear signal, trend rider bull signal today right here. A push here above 50 in that upper band, breaking above a 50. I'd like to see a little bit more volume than we're getting here today. But if it can hold like this into the close, it's pretty bullish signal for Facebook. Be a trend rider bull signal. I know he can't hear me, but you can probably see the video a little bit later on. But watch it in the close. If it sells off into the close back below the $50 range and back out of the upper Bollinger Band, I wouldn't trust this signal as much. But right here, it's a pretty decent looking signal. A little bit more volume and make me a little bit more confident it's going to run, hold that $50 level. But right here now, it's a pretty positive sign for Facebook. All right, so today, okay, thanks, Holly. Today I want to talk about the 7-day moving average. Is it a magical number? Is there something special about the 7? No, it's just And for those of you who've been in for a little while, you're going to notice, and you've already noticed how stocks tend to gravitate to the seven. We can look at. Let me put in here. I'm going to go down. Got a 7 day. It's just a simple moving average. Seven. I'm going to put in just for fun. I'm going to put in an exponential seven. You're going to notice it's not that much different. Change that to a seven. So now we got a simple 7 day average and an exponential 7 day average. Update that. And I'm going to have to really zoom in on this one to show you that. The exponentials are usually a little bit of a sharper moving average. It's weighted more to the recent price activity versus a simple seven, which just simply takes the seven, and averages it takes the price and averages out for 7 days. All right, so not a whole lot of difference. I'm sure you could use the exponential. It wouldn't make that big of a deal for you, but we just use the seven. And so let's look at the times when you can best read the seven. Okay, when does it best? Because there are times when you don't want to really trust a move below the seven or a move above the seven. Okay, and that's typically when stocks are in consolidation mode. So if I bring in some charts, first of all, let's talk about some stocks that are in consolidation and when it really hasn't worked all that well as far as using the seven for any type of an entrance. So look at Caterpillar here. I laugh because talk about a wild channeling stock here. And we're right back up towards the upper band. I mean, the upper, the channel here, 87 down to basically 82. A $5 channel here on Caterpillar. Hits the top, comes right back down the bottom, back up. Who knows what the future is going to hold, but you get a stock like Caterpillar to break out of this channel, like we were trying to capture there on Deere a while back. Didn't break out for us at the time, since has on some major news, but you don't really trust a seven down in this range when stocks start to channel like this. I'll bring this in so you can see this. Okay, so when it's in consolidation mode, if I bring in, let me get out of this and bring in the averages here. The averages are going to help us out a lot too when it comes to trying to find this. So you notice there's no real clear direction on at this point. Let me bring in this right here. As far as, looking at this signal, like this day right here, where it just shot above the seven like that. You'd think, well, that's a strong signal. And I've seen a lot of stocks do this recently. They just shoot above the seven. Yeah, it's a strong looking candlestick, but was there news? Was there something else that changed here? You look at the moving averages here, it's going to help give us a hint. What's this stock doing? Okay, well, the 100-day is down, the 200-day at the time down, and the 50-day down. So you don't not necessarily going to trust the signal right here saying, oh yeah, the get bullish here, it's going to take off. So you don't trust that move. Back down below, it'd be more trustworthy, okay, to play a signal down towards the low of the day. If this ran down towards the low and it closed right at the low the next day, it would be a better signal to the downside. But you still, even down here, and the hindsight tells you, heck yeah, man, we could have jumped in there on July 8th, rode it all the way up here to the 15th and hopped out and made a killing, right? Hindsight traders, that's great, but you can't trust these moves above the 7 or below the 7 if a stock's just in consolidation mode. You can't trust them nearly as much as you can on a stock that's already trending. And that's what the 7 does. We find a trending stock, and it's going to tell us, all right, is it time to get bullish on the stock? If it's in an uptrend, and if it move above the 7, could likely be the time. It's not always the time, but it could likely be the time. A move back below the 7, is it time to get bearish? It could be, it might not be. You got to look at what the rest of the information is telling you. So if I pull in some stocks, and I use these stocks all the time this year because they're the few stocks that you're going to find in downtrends all year. Of course, you can look at FAZ. FAZ, yeah, I think FAZ is the ultra short financials. But yeah, you can look at those. But here's BlackBerry. Yeah, poor BlackBerry. They got bit by the apple. that Apple phone came out, and that was signaled the end of BlackBerry. Well, not the end yet, but just doesn't look pretty. Okay, so what do we got here? We zoom in here and let's talk about this. Okay, now at this point, you see how you can't really see it up there, but you notice it's just consolidating right up to about that point. Not much is happening. Look at the averages here, they're kind of going up. This one, the 200, is going up right in that range versus these coming down. It's more consolidation. The averages aren't really telling you which way it's going to go. Okay, and then you look over to where they're all starting to be in what we refer to as a locked, oops, wrong button. Let's bring this back down like that, back in, to where they become in a locked down position. Locked down meaning all three of the averages are going the same direction. Okay, so now we got a term pretty well established. And you can see, besides probably a major earnings miss right here in June, which you can't predict, right? We see the downtrend starting to form, and the averages are all starting to roll over. So at this point, now it's in lockdown, you can start to trust strong moves below the 7. Okay, now this one's kind of iffy. I'm always going to be really objective with you when we're looking at hindsight. Okay, because man, we could all really impress each other all day long by looking at hindsight, couldn't we? That day right there, yeah, even though that's where it really started to roll over, and that's a pretty strong bearish candle, it's just barely below the 7. Okay, to me that's a little bit iffy, but look at all the averages, what they were doing at the time. The next day is where I start to trust it a little bit more, and this is likely an earnings announcement, so it's kind of an unfair example right there. Okay, but that's where I would start to trust it, because it's just below the 7. Now it opened up at the 7 and pushed down below, and we got all of our averages right here saying, hey, this trend, it's a strong downtrend intact right here, and that's where it's likely to go. And again, this is likely earnings, so that's completely unfair, but you look at it over here once again, gets back above the 7 in this range, pushes back below on that day. What were the averages doing at the time? Well, they're all headed down, and that move, strong, a nice move below the 7, and it's been dropping ever since. So where you can trust them in a downtrend is where you got them all three of the major averages here in a locked down position. Okay. There's not a little bit of consolidation through here. Okay, and can you really trust this moves on the 7 at this point? I mean, you look at that and say, hey, look, that's a nice strong move above the 7. Can you trust it? Well, it might have just taken off, but look what the averages are doing. Down, down, the 200 is just kind of going flat right through there. You can't trust it as much. Now, sometimes stocks will do that and just take off. And you're like, didn't see that one coming. Well, yeah. What this does is put odds in our favor. If you wait for the right times, it puts more odds in your favor than just trying to play a strong break above the 7 like that, because you can see it didn't last too long. Okay, now other stocks, if you look at JCPenney. Another downtrending stock, one of the few that you can find this year for most of the year. So averages in a lockdown position starting, in this range, somewhere right through here, down. The 100 here is a little bit flat, but still for the most part going down. So right there, and even now, that's about it. That's where they all start heading back down. So you can start trusting moves below the 7 a little bit better. Okay, now we'll look at this one right here. Nice move below the 7. Average is down, pushing below the 7 pretty hard, and what did it do? Came down for the next day and started to run higher. Okay, so if you put a stop on the 7, if you didn't get out, well, you got out over here, and that would have been a loss. Okay, and then next little move right here. Let's talk a bit. Everything's down right there, right? It drops below the 7. So could you say, yeah, well, right here, that's where it could have got in because it dropped below the 7. Well, these are little doji candles. Hindsight again, yeah, we could have got in there and got out way down here at the very bottom. Okay. I look for the stronger pushes below the 7. Look for the more detail. So it starts to get a little strong here. It starts to get down. Come up to the 7, run down. Come up to the 7, run down. 3 days in a row it did that. Any one of these candles right here was a decent entry. I say that first one right there because now that first one's starting to drop below the little bit of support that had been in place right here. Strong push down off the 7. Got all the averages down, suggesting strong downtrend. And there it went. Where do you get out? Well, you know me, if you got a nice profit and you take it, anywhere is fine. If you're happy with it, anywhere is fine. If you want to write it so you're going to get out on a close back above the 7, in this case where it's a bearish trade, that would have scared the dickens out of you right there. You know, it's Christmas time. I can bring up Charles Dickens, right? That would have scared it out of you because that's kind of a frightening day. But then it just kept going. And I don't know if that was earnings. I don't know anything about what that was at the time there. There's a huge spike of volume here, so that could have been earnings maybe the day before or something like that, or right around the 25th of September, something like that. Anyways, it goes down. So where do you get out? Well, when it closes back below the 7. Now, I don't think if I got in here, I don't think I would have stayed in till here. I mean, you had some huge gains. You had some big gains, you know, even at this range, and then it keeps going. But hindsight, right? And then right back here, I told you I'm going to show you all of them. I'm going to be very objective. Right back here, oops, this way, everything's rising, falling again, and then you get that one. Strong push down below the 7. Yeah. What was a little bit different about this time? Not a whole lot. I mean, because you look up here, there is a nice run up right here before the fall. This run up here is a little bit better, but still, right there, it's not a bad looking trend right or bear signal. And what did it do? Gapped higher and held a 7 the next day. This would have been another loss. You could have got out the next day on that push back above the 7. Okay, and then you wait till it closes back below. Now look at that close right there, just ever so close. And like I've said, I like the stronger pushes below the 7. That's a pretty strong push below the 7. If they're too strong, I'll hesitate a little bit, just because the bigger moves, you just don't know when those things are going to come back on you if they're too strong. All right, so there's a couple to the downside. Let's go over and look at Lockheed Martin. Lockheed Martin, it's been a locked up position all year long. Nice uptrend established right here. All the averages rising, and just nice looking chart. Okay. Now this type of company here, for the most part, they don't really react to earnings. And these big old volume bars right here, I don't think that this lately here was earnings. This was a top 3 of mine from right over in this range, I believe, when that broke out like that. Okay, but so it's in a locked up position like this. Now you can start to trust your moves to the upside. When you get the moves here like we're seeing today, where it's pushing back up off through the 7. For a better move on this one, I'd like to see it push up through the 7 like this and close above 140. That's where I'd consider this maybe for a top 3. If it does that into the close today, pushes up there above that 140 mark, suggests, hey, this thing might turn and run higher. Okay, but when you got everything uptrending like that, you're looking for these pushes back above. So, you know, a strong candle in this range. Now, look at that one right there. Yeah, I don't know if it had news, but look at the giant volumes on that day. That right there was suggesting a breakout all over the place, and it failed. Okay, the next time around, another pretty decent candle pushing up, not a bad entry. This would have taken you out with a loss. If you got out on a close below the 7, you got out 2 days later with a loss. Okay, here, get out on a close below the 7. Now, just to be fair, there it is again. There's another push. It looks like it's going to run up. It's not a bad looking candlestick. Averages are rising. 2 days later, it was back below the 7. Okay, take it out. This is a really strong move above the 7. Outright in this range. Not a very strong strong move above the 7 there. It's got a dragonfly. Be a little bit nervous about it, but it just ran. Okay. But right now, if this closed and looked like this into the close today, oops, not a big red one, but a hollow one, I can draw that. Look like that in the close would be a nice looking vibe bull entry. And you got everything going in a direction. Now again, you can't really trust the sevens when it's consolidating, going flat. And sometimes the averages aren't going to show you if a stock's going flat. If a stock starts to channel in an uptrend like this, after it's got it starts to channel and consolidate like that. A lot of times those moves can be a little bit, they can fake you out a little bit. Now I'm not saying that wouldn't have faked me out, because it probably would have got me in the trade back there. It's a nice looking setup. But if you come in looking at it later on and you see failed attempt here, I'm going to be a little bit more cautious in my trades going forward after that failed attempt. Then that's going to show you something. So it depends on when you come in, start looking at it. You can see here a nice consolidation, break here above the high right there on some good volumes. That went on my top 3. And the pullback here, it technically was just a nice little technical pullback. Love to see this go back up above the 140 area. Okay, now let's look at Google. I mean, you guys seen Google today? Up about 1%, which is close to $11 on Google. And okay, so what do we get here? We got Google's with an incredible earnings announcement, one of the best in their history right there. Big old gap. And if you've been following me for a while here, you know that I don't like to play gaps. I like to let the stock move for a little while, up or down, whatever it's going to do, then try to play the next move higher. Now it came over. This was a very strong move to the upside right here. A push above the 7. Everything's in a locked up position at the time. And then it consolidated nicely. It did close below the 7. Okay. And then bounced up off it again. Now this action right here, I wouldn't have entered on that dragonfly up there. Just a little bit of a scary candle for me to try to enter a bullish trade on a dragonfly near a top, and it just kept going. And so, oops, how do I get out of that? Like that. Sometimes they gap like that and they just run away from you, and that's what happened with Google, and it's happened to lots of stocks I've looked at over the years. Wait, maybe a little bit patient. Just recently, right? We're talking about USO. I got it. I was talking about USO. A beautiful bullish move right here after forming a pretty decent bottom right there for about a month. And jumping out like that, a very bullish entry. And I know some of you jumped into the trade right there, and you're asking me about it. And what was my answer? It was, wait to see how the first round of selling goes, and then look to enter. And if you do that, this can happen where it just runs on you, just keeps going, and you don't get in the trade, and that's fine. You make the trades and you make some money. If it works, it's great. But I am a little bit more. I'm pretty more. He puts me as very methodical. I want to see things just right before I get in. The giant moves like that, yeah, they can keep going. And I played a lot of these moves. I remember playing a candle just like that on Apple. I don't know how many years ago it was when they were at Macworld down in Vegas. I believe it was in Vegas at their Macworld. They announced the new iPhone. Stock jumped 10% that day. I had a candle just like that. And I went out and bought it. I went and bought calls on it that night at the close because the volume was astronomical. I just knew there'd be some follow through the next day, and I got it the next day. All right, but I don't do a lot of that, but because most of the time I'm going to let it settle down. I'm going to look for a little bit nicer entry, a fresher entry, I'll call it, for a push higher, and I'm going to miss trades at times, but I'm fine with it. Okay, so that's a pretty good summary of basically the vibes, and then using the 7. We use the 7 on the trend riders as well. It's a little bit a different type of a trade on the trend rider. It could be a reversal. It could be a continuation of the trend. You're going to capture a little bit more explosive moves by using the trend writer. But I've been asked a lot of questions about that 7-day moving average, and is it magical or special, or why we use it and things like that. It's just going to show us if a stock's downtrending, it's just showing us short-term strength in the midst of an overall downtrend, or if it's an uptrending, it's showing us short-term weakness if it's breaking down below in the midst of an uptrend, right? And stocks tend to gravitate to it. You can hear me in chat quite often, or on the video like this, when a stock gets a long ways away from the 7. Let me pull up Baidu. When it gets a long ways away from the 7, this was about $10 earlier on, there's a chance of some consolidation. It doesn't mean the stock can't keep running. Sometimes they just keep running. But what it does, the longer it stays way above the 7 like that, the odds increase that you'll have some short-term weakness, and it'll go back down towards the 7. You can see it happen over and over again, to the upside, to the downside. Anytime a stock gets a long ways away from the 7, it's going to consolidate back to it. Now look at it right through here. It got way above the 7, and it stayed way, because you draw lines down from here, it stayed way above the 7 for about a week. On its way up, eventually it pulled back to it. Okay, so it doesn't mean because it's getting way away from the 7, it's just going to drop like a rock back to it. Bullish consolidation would be like this over here, where you can see the 7 just slowly catch up with it, and then another push up off of it, like you take it higher. Now that you got a nice push up off of it, and it just didn't last very long. That resistance level was just starting to form right through there, okay, at the time. Okay. All right, anybody got any stocks they want to look at? Tesla, okay, it's off the highs of the day. It's still overall, nothing to react to right here. Microsoft, off the lows of the day, and again, if this closes down in this range below the 7, we're going to exit. We're going to take the loss and look for a fresher entrance. All right, doesn't mean we're immediately bearish on the stock. It just when it drops below the 7 like that, it just diminishes the chances of of a quicker pop that we'd like to see. All right, just raises the chances of some more consolidation down towards down below the 7. We don't want to give it much time. With Netflix, bring this in on a vibe. Zoom in on that for you. Yeah, nice uptrend here. A close up here towards the high would be a good signal. This is still a pretty decent signal here for Netflix. The volumes have been really light, but it's been going up even on the light volumes too, so it's not too concerning to see light volumes. You don't always need them in a trend, in a stock that's uptrending like this, as nice as it has. If it broke up through this level, and it's probably not going to do that, but right up at this upper level right here, this would be the start of what one of these 3 methods rising candle patterns. If it broke up through that, it would confirm that little bit of a candle pattern. It's a variation of that pattern there, but it's a nice looking bullish setup. This is likely to run higher. PPG. Okay, so it gapped here a couple days ago. Got some kind of news. I have not looked at this stock. Sorry, but the gap right here, I don't know if that was earnings or just some good news or what. Now, past level of resistance for it was right there. It's holding that level. You notice it got way above the 7, and so far it's just some consolidating, just kind of going sideways. If the 7 catches up to it, really, if this one started to, within the next couple days, started to show a candle like that, and you got all the averages rising right in there. Yeah, the MACD's isn't rising as well, but you can see here, looking at, because that's a lot of consolidation here. Look at the lows in the MACD, consistently higher. So if this happens to be the next low for the the next low for the stock appears at a higher low for the stock, there is a gradual progression here on the MACD going up as well. But that's what I'd want to see here. Let me know this consolidated for a couple more days and let that 7 catch up with it and a push up through that 170, 187.5 mark. Be very bullish, probably taken up towards that 190 mark. And if that doesn't happen, it might just gap and run away from us at the point too. That's the risk you're always taking. MDT, top 3 from a couple days ago. Yesterday had a nice little candle, excuse me, where it ran lower and then back up towards the 58 level. Today it gaps down under the 7. If it closed below the 7, it's a tough call. This is one of those deals where if it closes right here, you look at right around the 57.5 mark, and there's a lot of support around there for it. But if it closed down towards the low of today, I'd exit, take it, and run. This little doji right here, it's a little doji. They kind of represent areas of indecision in the market, not necessarily phenomenal, accurate, a great accuracy rating on a little doji, just a plus sign. This is one of those calls. I mean, it's not always that easy to say, okay, if it closes below the 7, we're out. Closes above the 7, we're out. It's not always that easy when you got it just underneath the 7 and it's on a support level. that's where the trickiness comes in, and that's just part of trading. You don't always get the nice moves. Now we got a move down. If we saw this on Microsoft today and that close, a pretty strong close below the 7, yeah, no questions. That's a pretty easy one there, just to get out. It just raises the chance of some short-term downside here, and the trade might get off the ground as fast as we like. Okay, but it doesn't mean this nice uptrend here is over because it's closing below the 7. Just the short-term bullishness is off for a while. So that's one of those tough calls on MDT. It's just right there. It's on support, just barely underneath the 7. If you want to stick to the rules, the law, the letter of the. If you want to stick to the letter of the law, is that right? Then you'd exit. It's just below the 7 there. Okay, let me get to go. Hang on just a second here. Okay, Kevin. Yeah, no problems. Kevin was lost connection here for a little while. We typically are going to trade S&P 500 stocks. Most of our trades will come from from the group, the S&Ps. Not all of them. We'll trade some small caps, some mid caps, things like that as well. What we'll stay away from is stocks that are not optionable. Stocks with low options, low open interest, and low options volumes, and that typically results in wider option spreads, right, between the bid and the ask prices. There's trades that I've called out on top threes and stuff like that in the past that I've said, well, I like the stock. It usually doesn't go on my top 3 list, but it'll go as like one of the runner-ups. One has gone on. I think I did Krispy Kreme donuts a month or so ago, and but the spreads are a little bit wide and the open interest is a little bit low. And if we made a trade like that and we bring hundreds of followers along, then market makers can really affect the prices on us. And we got to deal with it both ways. We've got wide option spreads. You got to deal with it getting into the trade and then dealing with it to get back out of the trade. So we'll stay away from a lot of those. But as individual traders, sometimes it's not that big of a deal. Yeah, Kevin. Usually, if we're trying to find a bottom, um, J.C. Penney is kind of a little bit of a bottom here. What you're going to hear us say, you're going to hear me say, okay, well, look at this trend right here. We've had a big downtrend. All the averages are down. Am I going to trust that candle right there? And USO had a very similar one recently. It's on a bottom. Yeah, maybe some bottoming signs here. About a week down here at this level below 7. Do I trust that right there because it's going above the 7? My answer is no. I don't trust it. I mean, hindsight says, yeah, trust it. I could have stayed in until it got up above 8. But if I'm there on that day, that's all I see, and I don't see anything over here, so I don't trust it. What I want to do is see a series. I want to see a higher low and see how this is going to react to the first round of selling. See a higher high, a higher low, and then I did not see a good entrance over here, just kind of weaker candles. But if so, now it goes up, comes back to the 7, and then you can see a higher low start to be set. Okay, well, the next round is selling. I might trust it a little bit more. Okay, well, hey, now there's another higher low set up here. You can see it held it here, here, and it came back to it, held it on this day, and then on that day, pushing above the 7. I might be a little bit more confident with that 7 that stock's going to go. But just one shot out of the bottom like that, it's a tough call. And with USO, yeah, I missed a trade. It just kept going, and that's fine. I'm fine with missing trades because I just want to see that first round of selling and see where that takes me, and then that's where I'll look to enter after it's sold off, and then I can see it start to set higher highs and higher lows from there, and that's where things will start to turn around, start getting a little bit more bullish. Goldman Sachs, yeah, it's sold off, and like I was saying this morning, if this sells off back at that 170 mark, I'd be a little bit cautious at going long. It could just break up tomorrow. I mean, this is a pretty strong move. All the averages are rising. Technically, this is a trend. I mean, a bull vibe signal here. Everything's rising. And look at the indicators right here. Up, stocks up trending here. That's a push above the 7. Got the averages rising all at once here. It's a strong signal. This closed up, even if it closed up 50 cents higher, even in there, just would be a beautiful signal. If it ends right at 170, I'd be a little bit more cautious. It could just keep going too, but I'd just be a little bit cautious. And it's early. We still got what 2.5 hours till the close. It's still early to call that. And we look at the market. Market down 4.5, about right where it was when I started. Goldman Sachs pulled back a little bit. It's kind of like the market. GMCR. So this wouldn't be a trend rider. I mean, a vibe. It'd be more of a trend rider. Yeah, still strong. I mean, this would be a trade. If I was in this trade, I would knock it out and just write it up. Just follow it. It still looks strong. There's no big signs here of weakening that I can see at all. I mean, uptrending indicators here. The bands are expanding. Just let this go. How far could it go? 76. There is some here at 74. I'll just show you. Here's 74. A little bit of resistance through here. 76. Yeah, somewhere in between that 74 and 76 range. If I was in a trade on this, I'd get out right in that range somewhere. But right now, even this candle right here is a very bullish candle. I'd still stay in if I'm in here. As far as entering right here, just not enough. Not enough signals. I mean, I can find a fresher signal out there that's just going to say, hey, the stock's more likely to go up tomorrow or down tomorrow than here. It'd be more like, it's got a nice uptrend here. It's going strong. I'm just hoping it's going to keep going strong because everything is saying likely continue, but there's no fresh breakout signals here. If you see what I'm saying. But yeah, if I was in a trade, I would not exit. Just keep it going. But if it gets up to that 74, 75, somewhere in that range, I'd probably take the gain. It can keep going, right? They can keep going after you take the gain. We talked a little bit about that yesterday. Just be happy with it, move on, and if you want to look back, fine, but don't try to learn anything from getting out with a profit. Procter & Gamble. Yeah, this is one of the stocks. It's on the top 3 mine from last Friday. And it went up and it's pulled back. Today it's right back on that 7. So this is one of those testers. Okay. In a trade here, it's a tester. It's down. It's holding the 7 here. If it comes back out above the 7, let me get rid of that, and bounces up like that, you got a good thing going. If it drops below the 7, then you'd get out. If it closes below the 7, I'd get out too. Okay, but It's just one of those testers. It's right on the 7. It's not really closing below it. If it closed right here, it's just a tester. I mean, it's right on the 7. It didn't close below it. Is it going to hold? Is it going to run up? We can't try to figure out every single day what a stock's going to do, but it's just the decisions we get to make as traders. Sometimes they can be tough. Sometimes they can be easy ones to make. Okay. Wells Fargo. Yeah, this was one of my runner-ups a couple days. Yeah, not a bad looking candle at all. It jumps up through the 7 like that. A little bit of a doji pattern right here. If I was bullish, I wouldn't get out. I'd stay. If it closed below 7, that's where I'd get out. But at this point, it's not showing strength or weakness. It's just an area of indecision when you see a little doji like that. But watch it into the close. If it closes up towards the tops, likely going to break out above 44.5. If it closes at the low today, it's still above the 7 here and still holding the 44 level. So let's look at it that way too. Here's 44. There's past resistance from over here. Okay, well, it broke up through the level, and coming back a little bit of a retest today. You get a bounce higher off of 44, even a little candle like that, odds are this thing's going to keep going. Yeah, Microsoft, I was asked if there's any news on it. There's not. There's no news. There's not news on Oracle or Microsoft or any of these. They're just down. The market's down. They're down. And that's what it is. It's holding 38, but if it below, and still if it closes below the 7, just suggesting short-term weakness, we'll probably get out and move on and look for a better, fresher setup. But yeah, look at the volumes. Really light volumes. We got what, 2.5 hours left, but for this time of day, pretty light volumes. But yeah, so we'll look at this into the close. SoCal, that's a good question. He asks, what do I see as a wide bid-ask spread? Well, it depends on the price. Like a Tesla, it's like 15, 20 cents. That's, on a $12 option, that's not that much. It depends. I mean, if you typically, if you're going to find a lighter volume stock, I mean, 300,000, maybe 400,000, you look at the options, the bid and the ask spreads are normally pretty wide because the stock's not all that heavily traded. It's kind of going to run over into the options as well. And the low open interest can result in that as well. And if it's a dollar option and it's a 10, 15 cent spread, it's a little bit wide. I could probably handle a 10-cent spread. You make a trade on a dollar option and you're getting in, you buy a dollar and the bid price is at 90 cents, you're down 10%. If you got a nice stock that can really run, that's not going to affect you a whole lot because you make up 10% in a day or so. So, 15, 20 cents is usually pretty wide, but it depends on the price of the option. For the most part, 10-cent spreads, they don't bother me too much, even on a $2 or $3 stock. They're not. It's not that bad. You can try to split the difference, and when I trade on my own, and you can do that pretty easy here. I just want to get in the trade so we can get the word out to everybody where we got in at. I just want to get in, but you can split. I know a lot of you are really patient. We make a move, and you're patient. You set stop. You're setting orders in to buy at a certain price, and you hold out. And a lot of times you're going to get it. Okay, so. Yeah, a penny or two bid-ask spreads on the really heavily traded stocks, right? The Microsofts and a lot of those, you're going to get those really tight spreads, and you got to love those. All right, so this is a stock I'm not too familiar with. I haven't traded this one. But looking at this technically, watch this 7. You can see it dip below the 7 up here. You got a nice uptrend intact. But watch what's happening. Look at the little bit of divergence here. That's not going to hold that angle for you, but you can see the divergence as this stock's going higher and this just keeps going lower. Okay, but watch the level. To me, I'd give this $40. Even if it breaks up through the 7 here, it's got to break above 40 for me to get bullish on it. It looks pretty bullish right now. It's coming right up to the 7, But you get a day down like this is all it would take, but it bounces down off the 7, down through that 38 mark, and this thing's going a lot lower. So this is just one of those points, okay, because it got the same thing action over here, starts running back up just to form a little bear flag pattern and then down at one again. Now that's big volumes. It might have had some news, likely had some news a few days ago where it gapped down like that. I'll have to see what that news is. It could have been an initial sell-off and it was overblown, and maybe it's going to start running back up here. But for me to get bullish on this, and not just the 7, I'd like to see this break up through the $40 mark. It's got some pretty big volume, so there's somebody buying in on this. But I wouldn't get bullish here now. It might just keep running, but I'd just hold off personally and jumping in. I'd give it that $40 mark. You're welcome, you guys. Tesla, about 46 cents. It sold off a little bit here. The stop's a 7-day moving average. Now, if you go out to Trader Minute and you go down to the trades and click on those trades, you click on one of the trades, it will show you the stops and the price targets and everything like that. Okay. And that's where we're at. A little bit of a pullback. Not anything to be concerned about. We still got 2.5 hours left. A run back up into the close would just be juicy on this. And Bond, where can you look at the Vibe and TrendRider portfolios on the site? Yeah, there you go, Martin. Thanks. Close Vibe and TrendRider. That's one way to do it. And what you got to do if you go into the closed Vibe and TrendRiders, we're going to start making those trades. Just there's been a lot of good setups just with the challenges and stuff like with the challenge trades and things like that. We'll start making some of those as well. So what you would do is go into the site and Bond, go into the site and the live trade seat, go down to where it says trades, but right above trades you're going to see Vibe and TrendRiders. You click there and then click on one of those trades and hit previous, and it'll take you back through those trades. If you want a little bit of training on it, you go up to the Options Education Week. The very last video in there is one that I gave for the Options Education Week on the Vibe and TrendRider signals. Gilead, yeah, and pretty bearish candle today. If it closed here, if I was bullish on it, had calls, I'd definitely get out on a strong move, push below the 7 like that. The volumes, the volumes are quite strong too. It likely got some news, but you can see it got big volumes yesterday and it gapped higher. So pretty volatile right here. But if I had calls here, I'd get out if this closed like this strongly below the 7. At the time, let me go in here. Okay, yeah, you're right, Max. Good. That was the low of the day for that on Tesla because the 7 was pretty close right there. The low of the day on that day when we got in the trade yesterday was right at that point that you're talking about. Okay, that's the stop on Tesla. Was the low of yesterday. Yeah, sometimes Martin moves higher. They gapped higher. GLD gaps higher on news of a drug being approved. Now it's selling off. That's the market. Uh, yeah, that's we don't trade many pharmaceuticals just for those reasons. Just because you just never know what's going to happen to the pharmaceutical. They're the most volatile group of stocks in the market. Baidu, everything's changed on Baidu. We were looking at this yesterday, but everything's changed now. It's about $10 above the 7. It's not saying it's not going to keep running. It just could, but there's risk here, some consolidation. So entering now, well, the option price is a lot higher. The stock's a lot higher above the 7. It's just a little bit higher risk than if you waited for the stock and consolidate a little bit back, somewhere up and up here, a little bit back to the 7 and look for another fresh push up off the 7. If you jumped in now, it would be one of those, and buy a heck of a lot less contracts than you normally would because it'd be a higher risk trade, and just hope it keeps running. You'd have to close your eyes and hope it keeps running. But no, I mean, if I was still in the trade, I wouldn't. You got a nice gain. I saw some of you guys jumping out this morning with 100%, I believe, AK, something like that. Nice gains. And you know me, if you get out with a gain, you're happy with it. Nothing wrong with taking it and not looking back. VIX, we're going to start making those. Whenever we start a new challenge, we'll give it a week or two before we start making those, because a lot of members will get those confused and buy those trades like it's a challenge trade. So we'll give those a little bit of time. I wanted to start making them last week, but with we just wanted to look for other setups along the way. But we're going to start making those soon. Okay? And what I'm talking about is making TrendRider and Vibe trades in a real account, in one account. And what we'll do is it would be posted separately. You'd still get the same email. Everybody would still get a same email. It says entering Baidu, or whatever it might be, that we're buying so many contracts, but this is like a bull vibe entry, or this is a trade for the TrendRider, this is a trade for the Vibe, other than this is a trade for the challenge. All right, we've done those in the past. We're going to continue, but we give a little bit of time here on the new challenges, so we're going to pick those back up. And we always buy $2,000 in those trades, and what we're doing, you're just seeing us making more live trades. But if you're just following the challenge trades, then you would not make those trades. And we have members that will do both, and some that just do the challenges, and some really like the TrendRiders, and everybody's a little bit different, but and uses what we do a little bit different. And that's one thing that's great. I mean, I love the site, our site, and what we do here. Yeah, and I know we got some Apple traders out there from Apple Trader. Micah is over there. Great guy, friends of ours, and welcome aboard. Yeah, I know, Jay Woods. I hear you. Sometimes they don't, but the challenge is up and going. Pretty much, people have a good feel for what we're doing, and so we're going to start those up again. Don't worry. Okay. All right, everybody. Well, I will be on chat with you the rest of the afternoon. Any questions? Just let me know. You can chime in there, or you reach me through email as well. It's Carl with a C at traderminute.com. Okay. Take care, everybody. Bye bye.